Hello, my name is Raymond Yeung. I'm a Hong Kong tax consultant. I was an assessor of Inland Revenue Department, for quite a long time, more than 18 years. Now I want to talk about Hong Kong profit tax, offshore profits exemption. Under Hong Kong tax law, Section 14 of Inland Revenue Ordinance, if a person, earned profits outside Hong Kong, he can apply for an exemption in respect of such profits. That means the profits earned outside Hong Kong are not taxable. What are profits outside Hong Kong? How to determine profits earned outside Hong Kong? In law, we call such profits, profits arising in or derived from Hong Kong or not. If they are arising in or derived from Hong Kong, we call them Hong Kong profits. Otherwise, they are offshore profits. They are not earned in Hong Kong. Profits arising in or derived from Hong Kong. This is a legal phrase. You may see it as a jargon. What is it? In fact, there are many types of profits in practice. The profits may be trading profits, maybe service profits or service income, maybe manufacturing profits, maybe commission income in respect of certain type of work concerning sales and purchasing. The income may be passive income, such as interest income from deposit, from a loan. It may be an income from letting out of property, the rental income. It may be income in respect of the use of an IP, intellectual property, IP. What is an IP? IP means, right, and right, it may be a copyright, a trademark, a secret formula, technical knowledge, IP, so IP income is a complicated subject. There may be profits from sales of property, sales of shares, etc. Let me talk about trading profits first. Trading profits means buy and sell profits. The profits from buying and selling, trading. That means we buy things and then sell the things out at a high price. Then we make money, we make profits. The source of profit, of course, buying and selling. Yes, the most important things. In the IRD, DIPN, we call it Departmental Interpretation and Practice Notes 21. RD says, the purchase and the sales. These are the two most important factors for considering the source of the trading profits. In case law, there's a famous case, the Magna industrial case. In that case, the court also says similar things. We have to consider where the purchase effected. We have also need to consider where are the sales are effected. Effected means negotiation, preparation works, signing of the contracts, and the following up actions, etc. So we have to consider what things have been done in connection with the purchase and what things have been done in connection with the sales. In practice, if the taxpayer has an office in Hong Kong, has personnel working in Hong Kong, the ILD will say, these things must be done in Hong Kong, so the profits must be effected in Hong Kong, so the profits must be earned in Hong Kong. In ILD EIPN 21, ILD says one factor, either the sales or the purchase, either one, if it is done in Hong Kong, effected in Hong Kong, then the profits, the trading profits, must be wholly taxable. There will be no apportionment. So that is the trading profit, the case law, and the ILD's policy. We must know that. In fact, if a taxpayer has office in Hong Kong, as personal working in Hong Kong, it is very difficult for him to apply for the exemption. This is general rule for the trading profits. How about the service income? Those profits earned from doing things, from working, from operations. There is a very famous case, the Hang Seng Bank case. In that case, the court said, we have to look to who did the service to earn the profits in questions. That means, first, what are the profits in questions? How was it earned? Who did that work to earn the profits? We must make a very careful analysis of these facts. The person doing the work, and whether he is an employee of the company, what is his relationship with the company, we must consider it very, very carefully. Can such action be counted as the action done by the Hong Kong taxpayer? Should it be excluded? There are a lot of disputes on such things. And who did the work? And whether did he do the work? The person doing the work, the taxpayer's employee doing the work outside Hong Kong, then the taxpayer can claim that such action, such earning profits action done outside Hong Kong. And in that case, he may get an exemption in respect of such profits. But this is the general rule, the basic rule. In fact, there are many people, doing many things. Some do it in Hong Kong, some do it outside Hong Kong. So in practice, quite complicated, So we have another very famous, very important tax principle, from another case called Kong Mile Service case. In that case, the court said we have to grasp the effective cost without being distracted by the antecedent matters, or without being distracted by the incidental matters. So we have to distinguish what are the effective costs from the the incidental matters. We only focus on the effective cost. What is the effective cost? The most important thing to do to earn the profit is the effective cost. Is it done in Hong Kong? If it is done in Hong Kong source profit taxable wholly. If such thing done outside Hong Kong, the taxpayer may argue that the effective cost outside Hong Kong, the profits should not be taxable, maybe in some cases apportionment can be made, for such things, So, the effective cost, where's it, Incidental matters. What are incidental matters, Supplementary work, not important matters, So there may be a lot of works, many types of work, focus on the effective cost, but usually there will be argument on whether it is effective cost or it is an incidental matter, and so this is practical difficulties, and these are the rules applicable to service income. For example, manufacturing is kind of thing, doing things, if a manufacturer has a factory in Hong Kong, all the profits must be taxable because that is the effective cost. The effective cost is in Hong Kong because the factory in Hong Kong. In that case, we ignore the location of the suppliers of the materials. We ignore the location of the customers, whether they are outside Hong Kong, because such thing are not effective costs. In Hong Kong, in the past, we have some businessmen have factories in China, mainland China. So these cases may be a contract processing case, or maybe an import processing case, depending on the circumstances, depending on whether there is a legal entity being set up in China. If the factory belongs to Hong Kong businessman, Hong Kong business, then it may be a contract processing case, and the Hong Kong businessman can claim for an apportionment of profits, 50% exemption may be granted. If there is a separate legal entity, in China for that manufacturing operation, we call it such thing import processing case. In that case, RD will not accept any allocation, any apportionment of profits. All the profits are taxable. Because the relationship between the Hong Kong businessman and the factory trading. And the manufacturing does not belong to the Hong Kong businessman. It belongs to the separate entity in mainland China. So there will be no apportionment of profits. In the past there were a lot of disputes on these two cases. Now, for the time being, no more contract processing cases. Because the mainland China authority will not, approve such things. So these are things in the past. And for other types of income, the passive income, the legal principle, follows the case law, the TVB international case, in that case, court says, the effective cost, for determining the location of profit is first, whether the Hong Kong taxpayer is the owner of such IP. And the second question is granting of the license, granting of the use, whether it is made by the Hong Kong company in Hong Kong. If the Hong Kong taxpayer, own the IP, own the trademark, patent, copyright, and he let somebody use it, charge a fee for such using, the royalty income, then, the royalty income, the income arising from the use of the IP will be taxable if the Hong Kong company owns the property and grants such IP in Hong Kong. If the company has no overseas establishment, RD will say the granting of right, of the IP right, must be in Hong Kong. But in a rare case, if the IP, is acquired overseas, and was used outside Hong Kong, in that case, IOD may accept offshore exemption. For another type of income, sale of purchase and sale of shares, usually we look at the location of the stock market, the stock exchange. If the stock exchange is outside Hong Kong, the profits from such dealings, the share dealings, not taxable because offshore. So it's for property income, very easy. If the property located outside Hong Kong, the profits exempt. Maybe that's all for today's talk. About offshore profit exemption. If you want more information, you are welcome to visit my website.